Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of the messy world of corporate finance. And let me tell you, today's report from Ramaco Resources Incorporated is like a pot of gold that someone stirred with a bulldozer. So, Ramaco Resources Incorporated, a company typically known for mining, has just dropped a report that has got some interesting moves. They've announced a big share repurchase program, which basically means they're buying back their own stock from the market. Why would a company do that? Well, it often signals confidence from the management, suggesting they believe their stock is undervalued. Or it is a way to boost shareholder value by reducing the number of outstanding shares. This isn't just a casual "we might buy back some shares" announcement. They're talking about a substantial $100 million program. That is a lot of money. This program is set to unfold over the next 24 months. They're giving themselves a good amount of time to execute this, which suggests they want to be strategic about it and not just gobble up shares all at once. Now, this decision was made on the 23rd of December 2025. What is really interesting here is how they plan to go about it. They can buy shares on the open market, which is the usual way, but they can also do it through privately negotiated deals or even block purchases. This flexibility is key. It means they can take advantage of opportunities as they arise. The focus of this repurchase is their class of common stock. This is the main type of stock that you typically see traded on exchanges. They're also mentioning that they're allowing the company to enter into written trading plans under something called Rule 10b-18. This rule basically provides a safe harbor, protecting the company from certain accusations of market manipulation when they're buying back their own stock. It shows they're being careful and trying to follow all the regulations. They also have Class B common stock, which likely has different voting rights or privileges, but the repurchase program, as stated, is specifically for Class A. This tells us where management's priorities lie in terms of returning value to the most commonly traded shareholders. It is also worth noting the other securities they have, like their 8.375% senior notes due 2029 and 8.250% senior notes due 2030. While this report isn't directly about these bonds, the company's overall financial health, which includes its debt obligations, always plays a role in its ability to fund something like a share buyback. Strong cash flow and a stable financial position are crucial for these kinds of strategic moves. The filing itself is a Form 8, which is typically used to report significant events that happen suddenly. In this case, the significant event is the authorization of this substantial share repurchase program. So, what does this all mean for Ramaco Resources on the surface? It is a positive signal. It suggests management is bullish on the company's future prospects and believes that investing in their own stock is a wise allocation of capital. It could also be a move to offset potential dilution from employee stock options or other equity issuances. However, we need to look beyond the announcement. The actual impact will depend on how effectively they execute this program. Will they manage to buy shares at a good price, or will market conditions force them to overpay? The company states that they cannot predict when or if they will repurchase shares, as it depends on various factors like price, market conditions, and alternative investment opportunities. This cautious language is standard, but it highlights that this is not a guaranteed event. This report is also designed to prevent selective disclosure of material information. By filing this 8K, they're making sure that all investors, big and small, get the same information at the same time. This is part of the Regulation FD, or Fair Disclosure, rules enforced by the US Securities and Exchange Commission, or SEC. The fact that they're committing up to $100 million to this program really underscores the scale of their confidence. This isn't pocket change. It is a significant financial maneuver that will impact their balance sheet. The report clearly lays out the what and the how in broad terms. They've authorized the buyback. They have the flexibility in how they execute it, and they're setting themselves up with plans to potentially engage third-party brokers. Now, let's dig into our analysis. Ramaco Resources is in the business of mining primarily coal. In the current market, coal companies often face a lot of scrutiny due to environmental concerns. However, they also can be very profitable, especially when commodity prices are favorable. A $100 million buyback signals that despite these external pressures, management sees long-term value in their operations and their stock. We need to consider the context. Are they generating enough free cash flow to comfortably afford this buyback without jeopardizing their operational needs or debt payments? While this particular filing doesn't give us detailed financials, a Form 8, when announcing something like this, usually follows proactive financial health. We typically look at their cash flow statements and earnings reports to see if this buyback is really a sign of strength or just a financial engineering trick. For Ramaco Resources, a company with significant fixed assets tied to mining, a repurchase program can be a smart way to return capital efficiently. They aren't reinvesting in new massive projects, so buying back shares is a logical step. if they believe their current operations are generating more cash than they can productively redeploy elsewhere. It is a way of saying we are more valuable than the market currently recognizes. The risks here are always present if the price of coal drops significantly, or if regulatory pressures intensify, the underlying value of the company could decline, making the buyback less effective. Also, if they execute the buyback poorly, paying too high a price, it can destroy shareholder value rather than create it. In conclusion, Ramaco Resources' announcement of a $100 million share repurchase program is a strong statement of management's confidence in the company's future and its current stock valuation. It is a move that signals a potential upside for shareholders if executed well. However, as always, a deeper dive into their ongoing financial health and the broader market conditions for coal will be crucial to truly assess the long-term impact of this strategic decision. Alright, that is our breakdown of Ramaco Resources' latest filing. What is your take on this buyback program and what it signals for the company's future? Do you think it is a smart move or a risky bet? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps, and subscribe for more deep dives like this. Don't forget to check out the Discord in the description for more discussions and community insights. Thanks for watching. See you next time.